This is a silver chart. It is a daily chart dated June the 4th, 2012, which is today's date. When using analysis regarding candlesticks and associating it within multiple candles, in this case 100, a moving average, which is a front-weighted moving average, the upper and lower bands, as well as Fibonacci retracement lines, it can make it a little easier to determine probability odds for future events. When we look at this particular chart, it's been obviously in a downtrend, but obviously now the lower lows lately are not in place, but the pattern of higher highs has yet to be in place as well. The sideways consolidation that we can see on this 18-period average moving average of close is just coming into play. But here's the problem. I can show you one chart or one candle, but what really happened within this particular candle? What happened in the final candle? What was all the events that took place within here? And in today's video, I want to explain candlesticks just a little bit better. This is an example of one candlestick chart. Within this, you can see that it is a green candle. That's the color that I use for upticks. Other people or other companies use green as well. Some will use other colors, maybe blue. But when you see an uptick, the basics is that the lower end is where the price action started. The top part of the color is where it finished off, and any lines that you see, like the line on the top part, was action in which the price moved up towards within the period, and same thing within the down one. And in this case, there really isn't that much of a down line, but if you look closely enough, you might be able to see a small tidbit of such. This is two candles. See, one candle in itself doesn't explain too much, but the more candles that you add, the easier that it is. This is 2 instead of 1, and you can see as it closes on the first one, the second one opens in the general area, and then you got equal lines on the second candle. Let's take the same thing and keep moving this thing out, because we're showing the exact same data, but we're showing it in less periods. So that's 3, there's 4, and there's 5. In fact, now we see a red candle for the first time. When you see a red candle, that means the open was at the top part of the colored picture, and the close was on the lower part. And again, when you see the lines, that is the direction that it went within that period at some point. When you look at the third candle, it's almost impossible to tell what came first. Was it the up move? Or was it the down move? And what other particulars took place? It's pretty much impossible. Now we're looking at 6. And within this, you can start to see that what was originally just one big uptick with a decent line going higher is we got an uptrend with 6 with the final one being red. Let's move it on to 7. First 2 candles show upward movements. Candles 3, 4, and 5 show sideways consolidation. Candle 6 is a breakout. And candle 7, which has a lower high and a higher low, an inside period, is a form of consolidation. And when you encounter this after an up move, that sometimes, or more than average, or more than 50% of the time, can result in higher movements. Let's move this on to 7 periods. If you look at candle number 5, that's that very small red one, which has a decent size line going lower, and the line going higher barely, not that big of a line. That's normally a bullish candle or a hammer type of formation, which states that it obviously went down within that period, usually at the start of it, and it closed right near the area where it originally opened. Usually future periods will bring gains. This situation was no exception. This is 8 periods. First 4 candles show up moves, with the second one having a little bit of volatility, as you can see with the upper line. And then you have the candles 5 and 6, which were consolidation. Number 7 is the start of the breakout. Number 8 is the breakout, and number 9 is the consolidation. This is 10 periods now. And when you look at candle number 5, that's the negative hammer, or a bearish hammer, that usually means that things are going to go lower. And it did the next period, which started yet another hammer. And what's interesting is if you look at period number 5, as well as the second final period, they look pretty much the exact same. A little bit of down move, but more significant up move, but it closed relatively barely higher than where it opened. Now the completion of the first one seen a down move, but then it came back up to an up move. This time it was a little bit different. So you have the exact same pattern, but now it's instead of going lower, it's just doing the same old kind of deal. This is 16 periods. This is 32, 64, 128. As you add more periods, I could now no longer state. If you look at candle 47, you notice it's going to take you forever to find candle 47. And as you move on, you can no longer look at each candle and understand what each one of them brings, as it gets very congested. And as we move further, it's more of a line chart. And this is a silver chart going back to 2006. And I could take any single one of these individual days and decide to do the same thing again, which is what I'm going to do. So I'm going to take pretty much the last day and do the exact same thing, except not as many periods. I'm going to, instead of going from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 16, 32, I'm just going to go 1, 2, 4, 8, and keep on moving within the rule of doubling. Okay, so this is, let me just center this out fine. This is basically going back from 10:48 Greenwich time on Friday to, well, just earlier on Monday morning. This is what you see. You can't tell too much on this. Okay, it went higher. It went a little bit lower, and it went a little bit higher, but it overall went higher. If we look at 2 periods, well, obviously the uptick was the original move, and then it just consolidated. It didn't go really down too much. It didn't extend the gains, just correcting through time, it looks like. If we do it through 4, then we can see that the big gains happened within the first quarter of that period, and then it's just drifting sideways over the next 3 periods. If we switch this up to 8, periods 1, 2, and 3 started the uptrend, and the remainder, 4 to 8, is going sideways, 16 candles. And then the uptrend started on periods 2, 3, and 4, although 4 had a little consolidation. 5 managed to barely make new highs, and then the rest has been sideways consolidation. And then moving on, same sort of deal again. You can start to understand one movement from another a little bit better. And now it's again starting to look like a line chart again as we get over 1,000 periods. So thank you for tuning in to today's video, and have yourself a great day. Bye-bye.